if you'd like to take your seats. I've got my Costanza and Elaine joining me. Thank you very much for the introduction. Always lovely for a Parisian to come to Scotland, so I'm absolutely delighted to be here, and you need to tune into the French accent now. So I'll introduce my 4 people on the panels first of all, then I'll ask them to deliver their key messages as to what they'd like you to take away from this session. And then lastly, I'll ask a few questions to the panel, but we'll also open them to the audience so that we can have your views. And of course, you'll have the opportunity to raise your own questions. So starting with Dr. Costanza Russo. She is the senior lecturer in international banking law and business ethics at Queen Mary University of London, where she teaches modules in ethics in banking and finance. She holds a master's degree in law and a PhD in economics, and she's just written a book, which is a collection of on law and ethics in banking and finance, which was published very recently in the summer. Then I'll introduce Giles, who leads the Chartered Banker Institute's thought leadership on ethical banking, particularly in the area of digital ethics. Giles holds a degree in law, a master in education, and has recently finished studying a master's in applied professional ethics. Then we've got Elaine at the back, who is the Chief Data Officer at RBS. She's worked for a number of European banks, including BNP Paribas, UBS, Barclays, and she is here now. And in her current role, she brings expertise in regulatory compliance to ensure that enterprise-wide data management continues to be a priority at the bank. And last but not least, Charles Haresnape, who is the CEO of Gatehouse Bank. He's developed a bank strategy to extend its offering to support home buyers, landlords, and savers. And Charles received earlier on this year a special award to recognize his initiative to raise the profile of ethical, Sharia-compliant banking in the UK and the bank's growing presence in the UK banking market. Previous to Gatehouse Bank, Charles was at Aldermore Bank, the challenger bank. So what I'd like to do is, if I may, start with Costanza. So you, as a lecturer, Costanza, would you like to tell us a little bit about the role of law in ethics, what the young generation is telling you about ethics in financial services, mother of 2 young adults who do not want to work in financial services, I'd like to say, and as well as a few words maybe about your new book that you have just published.
Thank you, very, very kind. First of all, let me thank the organizer for inviting me here. As a lawyer, I have to say that we all know how the financial crisis has given a huge drive for regulating ethics or, well, regulating ethics or unethical behavior. And I'm kind to be a bit probably controversial here, but I think that there is only so much that the law can do. Also because, you all work in finance, and you all know that the first principles of business for the FCA and the PRA is that you must act with integrity. With that said, what else the law can do? But other than that, the law has its own limitations, because it's limited in the sense that the law sets a standard of conduct, it sets the bar, below which you should not go, but in this way it's not aspirational, because it's not telling you what you could do more, how you can behave properly. And on this I know we have principles, and indeed we have principles-based regulations, but the problem again with principles, and this is another limitation, is that if you think about it, well, as they say, they can't work for people with no principles, but I don't think that this is really the case. One cannot generalize this. But the principles-based regulation requires a shared understanding of the meaning of the principles, which might indeed lack. And it's true that then principles are explained over and over and over by regulators and by other entities. But this actually kind of contributes to the complexity in understanding it. And this is another problem with laws in general. Laws can be complex, Now, again, this might be anecdotal, but if we try to print FISMA 2000, I mean, environmentalists might have an issue here because it's a very lengthy piece of legislation, and commentators before us discussed, some mentioned the capital requirements. Laws can be under-enforced, so even though we have some very good laws, they might not necessarily be enforced. And this makes you think about like the twin things about compliance and enforcement, and the two goes hand in hand. Again, with compliance, it's true that you might want to focus on what the law says and you apply it, and then however, over-compliance might lead to a kind of mechanization of ethics because you are focused on ticking the box, but in doing so, you miss completely the spirit of the law. You comply with the letter, but you miss the spirit. And for those of you who are familiar with accounting principles, with tax law, you clearly understand what I'm talking about. But then, as I said, compliance and enforcement are two sides of the same coin, because firms tend to be more focused in compliance by looking at regulators focus. So think of the thematic reviews that regulators issue. So this is where the compliance focus of the firms is going to be. But this means that basically other sectors can go undetected, other areas. And then on the other hand, though, regulators might tend to be more focused on those firms that they think are high risk takers. And this again means that those firms that are not considered to be as high risker, they kind of have more room for unethical behavior to happen and then to go undetected. And then again, I'm sorry that David is not here, but I appreciate that judgment-led regulation may kind of help out with this issue, but in reality, judgment-led regulation requires a high level of sophistication that maybe regulators do not have. And again, Corinne, I don't want to depict a bad picture of the law. I mean, Corinne mentioned the book, and this is editing a book is a very good occasion for, having other people to do all the work and you take the credit. And in fact, I'm glad to see that some of the contributors are in this room today. But if you look, the law can nudge ethical behavior, can nudge even ethical banking, and in fact, even though these are principles, the panelists before said that. But it has some limitations, which I hope I've highlighted, and also finally in terms of the enforcement strategy. Unfortunately, sometimes the enforcement strategy, the deterrence effect that comes with enforcement is not really credible. And in terms of what my students expect to be, maybe we can discuss this later because I don't want to take too much.
Sure. Giles, would you like to tell us a few words about the role in ethics, of ethics in decision making, for instance?
Well,
in the digital world, more generally. Yeah.
Sorry. Yes, I mean, I think the feature I'd like to focus upon is ethical professionalism, because it's individuals that create cultures, and I think it's interesting talking after Costanza, who's talked about how the law sets this arguably quite low benchmark, but it's the ethical professional that takes us beyond that benchmark and who demonstrates how we should be behaving. But I think, we're all here because we see how significant ethics is in finance and banking, but it's often unclear how we come to balanced ethical views. Individuals need to have the correct technical knowledge, but they also need to have a degree of ethical sensitivity to understand when they are being faced with an ethical problem. And if you look at a great number of scandals we've seen in the past, specifically ethical scandals, people haven't seen them coming. People haven't had that ethical sensitivity to allow them to understand that they are facing an ethical problem, not simply a more straightforward business issue. And that's really where I would look to bring in the role of ethics in decision-making, because I think it's very easy to forget ethics in day-to-day business, and yet it has to underlie everything we do. It has to be the framework for everything we do. And I think as we move into a digital age, it becomes even more challenging, because identifying accountability, responsibility in a digital environment, and seeing that individuals are no longer necessarily involved in every decision, how do we then understand who's responsible? How do we understand at what point we should be effectively putting on our ethical hats and starting to consider the ethics of a situation? So I think a lot of what I'm interested in is just raising that awareness of when ethics becomes relevant. I would argue it's always there all the time, and only as an ethical professional can you come to terms with that.
Great, that's great summary. Thank you very much. Elaine, would you like to tell us a bit about ethics and data side of things, maybe?
Sure, I'll just build on a couple of those points there. So for me, ethics are really important, but I think it's really important for all members of a particular company or society to be involved in those decisions, making it simple for people to understand where the lines are and give them that opportunity for a momentary pause, I think is important as part of this. But I also think that data is an intrinsic part of building out and understanding the values, and that can only be done with good quality data and a real understanding of how data is used, consumed, through an end-to-end journey, so information journey management. So for me, the things that I've been concentrating on for the last couple of years since I took on the role was all about the piece around information journey management, information ethics, and making sure that this is easily digestible by all members of a company.
Thank you, Elaine. Giles, would you like to tell us a little bit more, give us a bit of background about the Sharia principles and how they are embedded into Gatehouse Bank culture and strategy, please?
Sure, no problem. I mean, I'm the boring practitioner here, so day to day, it's my job as a leader of a bank to actually make this happen right throughout the organisation. We're a Sharia-compliant bank. We're a fully UK bank. We're not a subsidiary of an overseas bank. And that makes it quite interesting. I'll let you into a massive secret, personal secret. I'm not a practicing Muslim, so therefore, you know, it's inclusive to everybody. So it's based on the ethical principles of Sharia finance. So Sharia finance is the underpin to it, but it's all about the general ethics of lending. We, as Gatehouse Bank, we're tiny. We're a couple of hundred people. We're growing fast. We describe ourselves as a challenger-style bank that came from a previous corporate background. And what's really interesting, we were one of the founder signatories to the UN Principles for Responsible Banking. There's 200 of us, yeah? So, yeah, we think it's sufficiently important for a little old bank like us to get involved right from the start. The thing that really interests me, and it chimes, I think, with our bank, is Principle 3. So we've talked justifiably a lot so far this morning about climate change and the green agenda, which is massively important, not to be underestimated. Principle 3 is about customers and staff, basically. So we've spent a lot of time. I can do my tiny bit to help, you know, the platform become greener, and we will do whatever we can, obviously. But what I can do is adhere to the principles of responsible banking for my customers and my staff. And to do that, what is very interesting right now, we observe some of the big institutions, I hasten to add not RBS, but some of particularly the insurance companies. We all know about how customers are treated and whether that's right or wrong. It's an individual perspective. But treating existing loyal customers in the way some institutions do doesn't strike me as particularly ethical. So our stance is much more around, you know, we have savings products. We don't have bonus elements to those products. It is what it is. You get what you get. And we estimate, obviously I don't ask anybody's religion, but we estimate that 70% of our customers are non-Muslim because they kind of like what it is, they like what the deal is, and they like what the principles are behind it. In terms of staff, I said this last year, it's very, very simple, incredibly simple. It's about treating people as you want to be treating yourself. It's no more, it's no less. But you've got to do it from the top, and you've got to be seen to be doing it. Sometimes not everybody wants to adhere to those principles, and basically they leave the organisation. It's not a soft option, it's doing the right thing. But I think we've got a long way to go yet to do that. One other final thing, we see stress in the workplace, which is massive. I mean, I've seen everyone in the audience here. Pretty much everyone's been on their emails this morning. It's because it's addictive. I'm not blaming anybody, but it's addictive. I had a sneaky look myself at one point. But that is stress-related all day long at all levels. You know, I'm even considering now bringing a sports psychologist into my senior management team on a part-time basis, because we have to be able to deal with the pressures but still lead a business and make a difference to our customers and to our staff.
Thank you, Charles. So I'll just share a little story that happened to me last year. So last year I wrote a report on responsible reward, which is the integration of ESG measures into incentives, annual incentives and long-term incentives. As part of that report, I interviewed a number of senior executives. And I remember interviewing one particular person in a FTSE 30 company, so a very big firm. And when I started talking to him about culture, he looked at me blank. He said, what is culture? It's this blancmange that you don't know how to define, how to manage, and how do you improve it. So my question to the panel is, how do we create and regulate an ethical culture within financial services? Anybody would like to take that question?
Feel some pressure to go first. This is, I guess, a 1 billion question. And again, very brief digression. I think I'm a bit too skeptical on the idea of regulating culture, because of what you said is, well, I think there are some common elements of good culture, but the thing is, if you do regulate culture, in a sense, you externalize the responsibility to someone else. You see it as the law. So it's someone else, a third party from the outside, that is telling you what your good culture should be. But this is an externalization, so you don't take responsibility. So in terms of regulating culture, I think it's really something that is a responsibility of the firm. Having said that, again, as a lawyer, I think we should not reinvent the wheel. We do have some powerful tools already, and I think one of the tools that can be used, can be increased, is actually the strengthening of fiduciary duties and fiduciary law in banking. Now, again, this is a bit more complicated matter, and we know that the applicability of fiduciary duties in banks is not straightforward. But if you think about it, they kind of reduce the twin problem that you have in every principal-agent relationship, that is to monitor your agent, but also to kind of trying to reduce their discretion. Because what fiduciary duties and fiduciary law does is that forces the agent to give and to render account, so they make them a bit more accountable. And also, again, if you think at the remedies that fiduciary laws can offer, these are a bit broader than those offered by tort law or by contract law. Some people say that we should increase criminal law or criminal sanctions. I'm a bit skeptical about that too, and we can discuss this later on. But having said that, I think that probably internally, because what I said, something more should be done internally. And for sure, a greater role can be given to professional bodies and to the codes and standards of conduct. The bankers in the Fair and Effective Markets Review, they use the expression, we should give teeth to those codes. Reward ethical behavior inside the organization. I don't know how your progression, how the career progression actually works in practice, but I suspect that while bad behavior is punished, ethical behavior is not rewarded. And then finally, again, internally, I would emphasize the importance of encouraging people to speak up when there is a problem instead of ostracizing them.
Thank you. Giles, you scribbling away.
I really disagree with quite a lot of that about the law. I mean, the notion that we would legislate a fiduciary duty flies in the face of behaving as an ethical individual. As ethical professionals, we undoubtedly have duties. We should be honest. We should be behaving with a duty of care because it's the right thing to do, not because the law tells us to. And indeed, I think this is where law and regulation can become quite infantilizing. We need educated, qualified professionals who are able to understand very difficult ethical issues. I mean, it's not the easy ethical issues that are the ones that challenge us. It's the difficult ones, and that's where we have to be professionals who really can get to grips with those. So I think really only by seeing ourselves as professionals, being qualified professionals, voluntarily adhering to codes of conduct and standards, and really understanding the nature of our behavior and those codes, that's the way we build the culture. As for regulating it, I think there's a bit of an oxymoron there. If you have an ethical culture, you don't need to regulate it. It's ethical.
Giles, what's happening on the ground?
Well, I disagree with that as well, actually. So, if everyone was a responsible, integrity, fulfilled professional, we wouldn't have had PPI, we wouldn't have had LIBOR rigging scandals, we've had nothing else. So, by itself, it needs some encouragement, but it's not the answer. So, unfortunately, the regulator, understandably, felt fit to implement the senior manager regime, which is regulatory, essentially. Mm-hmm. I'm an SMF1, so I've got the thing. Yep. And you're on the hook, big time. Now, that frames your mindset, but it doesn't take away the leadership responsibility of ethical behaviour and responsible banking. That comes from almost the heart, really. You either believe it and you practice it, or you don't and you don't. So I think, unfortunately, there's had to be regulatory frameworks around these things to stop people going off-piste as much as maybe they did in the bad old days. And I think, but what we are mindful, certainly those of us in the industry nowadays, and some of us are old enough, me particularly old enough, to see the glory days, the bad days, the whole lot, and I was at RBS until 2005, so I've seen the good times, big style, but some may say they weren't. But the whole world's moved on. But I don't think you have to have, unfortunately, an underpinning of regulatory minimum requirements in terms of conduct. I think it just has to happen. What we layer on top of that is our business to make a fantastic place for people to work, and therefore customers enjoy banking with us. So I think it's a bit of both myself.
And just if I could quickly add in there were less than 30,000 qualified professionals in banking in UK circa 2006. So I'm not suggesting they were all there then.
I'm not sure they saw it that way.
Elaine, anything to add to this?
I'd like to build on those points, actually, because I think that in terms of creating a culture, it is about all staff, not just from the top, and it's about what do those people do when actually no one's watching. So it's about making sure that the messages are very clear, easy to understand, but also to ask people to have that momentary pause, because it's about the unintended consequences. I make a decision today. Am I very clear in my mind's eye that decision is going to be the right decision for 5 years' time hence? Or, actually, is that context going to change, and the way that I currently use that data, the way that I currently make that decision, actually wouldn't be the right decision on a go-forward basis? So we have, and I think in all of these organisations, we have many staff that we have to ensure has got the right appropriate training. We have strong leadership at the front, but it's also about appropriate incentives as well. So echoing the point that Dame Susan was making earlier on, it is about the what, the why, and also the how, and therefore measuring progress, being able to have a set of KPIs around ethical decisions, I think is incredibly important. Difficult to achieve, but I think really important.
That leads me on nicely to my next question, actually. As a remuneration consultant, it wouldn't be appropriate if I came here and not talked about the B word, a different B word, the bonus word. It's widely accepted that bonuses and incentives were certainly contributing factors to the great financial crisis. What I'd like to share with you is a few numbers, and then I'll ask the panel to share their views on that. A number, so we've talked about the UN Principles for Responsible Banking. When I look at the equivalent in the investment space, the UNPI, under 20% of signatories, so that's over 2,000 signatories now, are actually self-disclosing that they are linking their executive pay to the performance of their responsible investments. So the reality is probably much lower. A few other numbers. Over 300 firms have signed up to the Women in Finance Charter. For those of you who don't know what this is a UK Treasury initiative to promote and increase the number of women in senior roles. So it's gone past 300 signatories now. It's made of 4 pledges. The 4th pledge is around linking diversity targets to pay. When we look at the remuneration reports very closely, only 3 firms out of 300 are making a full disclosure of what their diversity targets are and how the equivalent weighting in incentives is derived from those targets. That's 1%. More recently, last week, last month, there was a very high-profile equal pay case in financial services. It's all over the press. You can read it yourself. It cost that bank £4 million. And on the back of that, a week ago, over 100 very senior women in industry have started the Me Too Pay campaign. Watch this space. It's just started a week ago, but quite clearly, this is driving momentum that pay is important. Pay is a key risk in businesses as well as in society. My question to the panel is, what is the role of incentives in promoting a more ethical culture? Would anybody like to have a step at this question?
Well, I better go because that's what we do. Because we're relatively new and relatively small, it's easy to redesign things, so I have that added advantage, to be fair. What we've done, as a lot of banks have done, certainly in the UK, is to kind of redesign the whole reward packages and the way people are incentivized, motivated, or actually, a consequence of not doing things is also an important thing. So, we split, like a lot of people do, we split any incentives that we offer or any bonuses very heavily between behaviours and financial results. Currently it's 50-50, but it arguably should go more than that in due course. And by behaviours, we mean living the behaviours that our staff have helped us develop. So we went through a process 12 months ago of redesigning and reworking the behaviours of the bank, the culture that we believe is the culture. We did that with our staff because we could. We were small enough to do that. So we have 3 now. We have responsible, open, and can do. ROC. Those are our 3 principles. And the open is important because we publish whatever we can, certainly internally. And now it's a consequence. So you definitely cannot get any benefit, whether it be incentive, standard bonus, whatever it is, if you don't hit the minimum requirements that we think is fit on the behavioural side. So that's that's a bar to anything else. You cross that line first, the behavioural aspects, then let's have a look at how your financials were. So it's not financially entirely driven, which it would have been a few years ago. So it's moving in that direction. Arguably, some have gone further, but that's just being honest, that's where we are right now.
Yeah, and I think a number of financial institutions are looking along the similar sorts of things. So it's about the what and about the how, and we have our values awards, which people can nominate any member of staff. It doesn't have to be your members of staff. It could be anybody within the organisation, and those are celebrated at the highest levels. And I think it's about consistency. It's about ensuring that practice has been enabled, because I think through that, you then get a change in behaviours. Otherwise, these things will wane off, and unfortunately, the values and the behaviours you're expecting won't be there for the long term. And I think that's incredibly important.
Just to supplement to that, one thing we've found in our short little life cycle is that if you can try and embed the culture across the business at all levels, which is obviously the objective, staff themselves winkle out the people who don't live those values. They actually start to say, well, do you know what, I'm not sure that person there is actually behaving in a way that we think is good. So that's a great place to get to. The staff themselves are holding themselves to account, as well as people from the top who have got to live it. And the biggest challenge, I've seen elsewhere, I've got to be careful what I say about my own board, because I'm on it, is getting the board to actually really, really buy into it, rather than just say, yeah, nice one, crack on, when we present to the board. So if you've got a very, very supportive board that totally buys into the behaviours and the culture, you're on an absolute winner. That doesn't happen everywhere.
Thank you. Costanza, anything else to add?
Something very quick to this. I think that, now we can be a bit more optimistic on what the law has done, because we need to think at why managers behave, what drives people behavior. And certainly in banks for a long time has been a monetary incentive, the bonus culture that we are discussing, but also if you think at how the law has gone beyond that by addressing the problem of the so-called lack of skin in the game in the operation. So when regulating securitization and imposing the firms to have to retain some economic interest in the securitization, this was another way of addressing incentives. If you think again at the senior managers regime, we may like it or not like it, fine, I understand that point. But it moves, there is here again a shift from the responsibility is collective at the board, basically no one is responsible, to, well, no, actually now I am responsible. And then also at the even broader level, if you think at the shift from bailout to bail-in, so even the idea is that now banks do no longer enjoy the public system of, well, not all the system of safety net that they had before, so now actually they have to plan up for their own failure. So even if you look at the broader picture, in this respect, this is another incentive that has been addressed by the law, and even we think that capital or the financial health has little to do with ethics. That's really not true. And so even the insolvency law forced banks to be more sustainable and more stable.
Thank you, Costanza. An additional factor to incentives that contributed to, where we ended up to in 10 years ago, over 10 years ago now, is the lack of transparency in financial services. So there's a definite urge to increase transparency to help rebuild trust. And my question to the panel is, does transparency help to rebuild trust? And is that always the case?
So I think transparency can help, but I don't think it's the only ingredient to trust. I think that you think about GDPR and the key principles within GDPR. It talks about lawfulness, fairness, and transparency, amongst others. Clearly, transparency alongside legitimacy helps in terms of then knowing how to use information in what context. However, I would also say that trust can be built over a long period of time and can be lost in an instant. And therefore then, trust goes wider than just being able to show some reasons from rationale for decision or even data itself. It's more about actually being credible. So being very truthful about what you know and what you understand and what you don't. Being reliable, delivering on commitments that are being made. Being open and also interested in customer. So customer, again, against the UN principles also features quite richly. Understanding the customer, what's the customer trying to do, what are they trying to achieve is incredibly important. Supporting that customer with a relationship that's strong is there. But also then trying to put the customer and the stakeholder community first with a balanced scorecard. So it's not just about the customer, it's about having that balanced scorecard as well. So transparency helps with all of those aims, but I don't think it's the only ingredient.
Okay. Anybody else?
No, I agree with that wholeheartedly. I think, unfortunately, this is another area where the law has had to come in, actually underpin certain key principles like GDPR. So, it existed before, but it was felt by, the regulators, the legislators, that was an important thing to do. Don't disagree at all, but it had to be done, and therefore that's a shame. But that it had to happen. It should have happened by itself anyway. If you look at other things like subject access requests, now anybody individually out there can request information of themselves from institutions. That's a very good thing. That again is a legal principle, as I understand it. So we've got to get to a place, I think, where we're doing these things off our own back rather than the regulator having to underpin it first. That's the wrong way around, totally the wrong way around. Especially now we're moving into a different era where the industry has moved on. We should be now much more open and transparent, and hopefully, that's progressing. I think it is, but I think we've probably all got some way to go. So there is a tendency to only publish what you have to publish, and perhaps we ought to, between us all, start to publish some more things. Even people like us, perhaps, who's not a PLC, we're not a quoted PLC. You know, we're going to be more explicit about, you know, kind of our CSR type principles rather than just the bland statements that a lot of people used to put in their annual accounts. We want to be much more inclusive in that. And also talk more about what we're doing with our staff. Because I think customers might welcome how the staff that are serving them are being treated themselves. Mm-hmm. So there's more we can do.
Indeed, yes. Do you all agree that transparency is a good thing?
I think it's got restrictions, as Elaine says. It's, you know, typically a relationship we have of trust, we wouldn't describe it as a transparent relationship. We typically trust our families, our doctors, our friends. We don't use transparency as a term to express that. And I think it's quite interesting if we put it in the perspective, as James Susan Rice was saying earlier, we know that trust is declining, yet there is more information out there than we've ever had before. We can find out huge amounts of information. We can, as Charles was saying as well, access any amount of information we couldn't get before. So there is a lot more transparency, there is a lot more openness. But I just think the mistake is to link that too closely to building trust. I think if you're a very secret organisation, yes, of course, trust is going to be difficult to achieve. But I think there's a misplaced link between transparency and trust. It also gets back to what one of my colleagues was saying earlier about it's what you do in secret that matters most in some regards. It gets back to one of Plato's principles. What matters is when you're not being watched. So actually what matters is, are you honest? Do you have integrity? Are you going to put your customers' interests first? Whether they actually see you doing that, well, that's a great check, but it's not necessary for trust in itself.
I think it's building on that. It's about, when you're thinking about transparency, it's about appropriate transparency. So am I making a piece of information available to somebody who will then be able to digest that piece of information and know what to do with it? Or actually, by providing that piece of information, actually, I go on to confuse them further. So it is about appropriate transparency, which I think then can lend itself towards trust.
Okay. I mentioned before that financial services may not be as attractive a sector as it was 30 years ago when some of us entered the industry. My question to each panelist is, what role do you play to ensure you leave the financial services sector a more ethical place than the one you entered? On a personal basis, what's your
kick off,
personal pledge?
So I believe that part of my role is to break down silos within organisations. So the role that I undertake is undertaken by a number of different people within the sector, and I think what that needs to be happening is breaking down those silos. It's also about, I think, creating a level of clarity about how things are being used, how they're being consumed, and what basis people are making decisions. So creating a set of principles which are easy to remember by all staff and can be used in the moment that matters to make the correct decision that's not just about a short-term objective. It is about understanding the unintended consequences and that horizon look that Sarah was talking about earlier on from the Bank of England. It's about putting all of that into sharp focus before then making a decision and proceeding. So I think the role that I'm undertaking hopefully will stand the test of time and will ensure that organisations moving forwards are ethical-based organisations and that we can see the virtues of all of that come to life.
Thank you, Elaine, for sharing. Anybody else?
Well, as somebody who started as a graduate trainee in NatWest in 1979, I know you find that hard to believe, but that's what it was. I've seen a lot happen in this industry, and from the lows, the highs, to the lows again. I've seen about 3 cycles. It's unbelievable. But I think we've got a great opportunity now. I feel much more positive now than perhaps I did 10 years ago about the springboard we've now got through lots of vehicles. The UN principles is only but one of them, but an extremely important one. We see banks starting to collaborate more, as the guys on the previous panel were talking about. So we've got to keep that momentum going. And I think while we're doing that, I'd like to be remembered for somebody that treated people responsibly and fairly, not soft, but fairly. And if that's my legacy, that's job done, frankly.
Thank you, Charles. Costanza, you're in contact with the current young generation. What's your legacy to them?
Yeah, thank you. So my student, I actually had a class yesterday, and I knew this question was coming up. So I asked them, I said, look guys, why are you here? I'm assuming it's not because you think that this module is easy, really. They said no. And I asked them, really said, why are you taking a module in ethics? So these are, and actually this year was really popular, I got to 50 students, which is really surprising because these are postgraduate students that do an LLM, a certificate, an MSc in banking and finance or in commercial law. So they want to get value for their money. And you would assume that they do banking, core banking, M&A, so modules that will land them a job. And so you say, so why are you doing ethics? And they express some concerns, which I hope the industry is able to address in the future. The first thing that they told me is that they were really appalled at the behavior of financial firms. So they understand the importance that financial firms play in the economy. They just don't understand why they misbehaved. And so it would be good if they stopped misbehaving. Other students said, well, because we don't think it's all about business. So they say, we really want to have that type of conversation about more philosophical aspect. And this somehow touches upon, I think, what you were saying before. You need to have different way of thinking to address some problems, especially if they are old problems, you can't address them with old thinking. With new problems, you can't address them with old thinking. But then there were the two groups. And this really, I encourage you to do something for this. So some of them told me, they said, I've been working in banking or in law firms working for banks, of course, at a junior level. And they said, well, the reason, the problem is we don't really understand, we don't have the broad picture. So they don't understand if what they're doing, that little bit of a contract that they see, is going to go somewhere. So they say, we are afraid that we don't actually see the ethical dilemmas here because we don't have the broad pictures. So if you can think of these junior people that see only little bits of things. And then others said, well, because we want to know how to change behavior from inside. We want to know what to do when we actually realize that there's something wrong. And then finally, another group of students, they saw a little beam of hope and light. They say, well, actually, we realize that finance has a broader role to play in our economy, and we are really keen on understanding how sustainable finance works. So actually, they hope that actually finance can play a more positive role in our society, and this is also my message to you.
Right.
Well, I've got 4 children, and if I could get them to understand what a bank is in an online environment, I'd be doing well. But more seriously, the Institute's been working in the area of ethical professionalism for about 150 years now, and it is actually absolutely core to what we do to build a community of professionally qualified ethical bankers.
Thank you. Before we open to questions to the audience, I would invite you all to make your own pledge as to how you would leave the financial services sector a more ethical place than the one you have entered. Can we have microphones, please? Gentlemen at the front. Oh, sorry. Yeah, that's it.
Just checking this on. Hugh Whelan, I'm the co-founder and managing editor of Responsible Investor. I've been a finance journalist for 25 years. And in many ways, I've been the beneficiary of some shabby ethics, some pretty poor internal conducts, ripping off of clients, general ignoring of regulation, and bad policy. And one of the things I guess my confession is that I've become slightly jaded about the conversations around culture and how it can be made ethical. I think there's a serious problem with the way that behavior is regulated. And when I've seen industries where big fines are slapped on companies who flout the law or flout what's considered to be ethical behavior, and when I've seen senior managers subject to real sanction I've seen culture being driven pretty quickly through organisations as a result of that. And I wondered if the panel could do two things that would really drive quick behaviour through organisations, whether it be bigger fines or whether it be sanction for senior managers or anything else. Or maybe I'm totally wide of the mark. Maybe my experience doesn't really matter that much. But if you could do two things that would actually simply start to really change culture within organisations, what would they be?
So I suppose that's assuming journalism is the example of how to do it, I guess. But anyway. So, but to take it on there, so there's plenty of fines going on there, isn't there? But anyway, to take it on the chin, I mean, basically, you know, it's a fair point. There's been lots of, you know, issues in the past. No one's saying there hasn't been. So what are we doing to try and prevent that happening in the future? Well, it's about being much more inclusive with our people, but making it actually much more clear what good behaviour looks like. So I think in the past it was left to local level, to people who are making the most money in big organisations, became the kind of superheroes. And that's changed. Well, I believe it's changed. So it changed where I am. You know, it's now about how can we do the right thing but still make some money. I mean, let's face it, we're all private, you know, we're all entrepreneurial businesses. We've got to make money to survive and for our shareholders. But you know, I think what you've described is, I would like to hope, is much more of a legacy situation than a current one. Some things are still working their way through, I'm sure, and recently there has been some fines, but activity that's been going on for several years. So I'm not trying to defend it, because you can't. But all we can do, frankly, is look forward and, you know, implement better business practices within our own organisations. And I think we are doing that. I think the backdrop of some of these UN, because it's dead easy to be cynical about the UN principles and all that good stuff, but actually there's a genuine sincerity that banks are going to hold themselves to account on this stuff. And it's not just about climate change, it's actually about, as I said before, customers and staff. So if we get that right, we're on the right trajectory. Before those things, in my experience in the past, those things were never on anyone's agenda. But now they're fully on most people's agenda. So that's the best I can say to you, really.
Thank you, Charles. Anything else? Otherwise, JB's got a question. If we've got a mic for the first row, please. Thank you.
We're making a run today, aren't we? Thanks, Corinne. JB Beckett, ex-banker. I guess that's the important part. I also sit on a disciplinary panel for a chartered body, and I'm also a transparency campaigner. And it's great to hear from the panel that we're making great inroads, that we're making progress to building trust, and that we are endorsing practical transparency, which I think was a very interesting term. It's good to hear that we're making progress after 105 years, when Louis Brandis had actually written Other People's Money and How Bankers Use It. And he described that sunlight is said to be the best of disinfectants when it comes to poor corporate culture. And if I could just make an observation, Corinne, and perhaps the question to then the panel, does size, and I mean corporate size, the size of an organisation, invariably induce bad culture and bad ethics? That would be my observation over 20-odd years in the banking sector. What does the panel think?
So we've got a representative from a large bank and one from a smaller bank, so I don't know if size matters.
So that isn't my experience. So, you know, I have seen, you know, personally, as I mentioned before, we have our Living Our Values Awards, where, you know, members of staff can vote for each other on behaviours, and it's around behaviours and what we've seen that's good of people doing and going the extra mile, which wouldn't necessarily lean towards a commercial perspective, but maybe stopping something that could seriously harm an individual from a fraud point of view, and then going the extra mile, taking I suppose, the initiative to do some further due diligence, or, you know, helping people with the moments that matter when something serious in terms of an event has happened. And I've seen that in terms of the Grenfell Tower. So I have seen those things happen, and I do think companies are celebrating those particular situations in the right sort of way, and by setting the context around what the company's values and purpose is, by ensuring that there is mechanisms by which we can capture the data, your point around sunlight, I think is important, and I think will ensure that culture and good culture continues on.
Yeah, I mean, just to support that, I think, you know, historically that may well have been the case. The bigger banks have the biggest problems because they have the biggest clout and they have the biggest balance sheets, and therefore they could do more. So that's probably, you know, a logical thing to say, I guess. But I think going forward, I think the bigger banks, my experience and what I see is the bigger banks in particular are holding themselves to account in a positive way, much more than they ever did historically, actually. So I think there's a genuine learning of previous experiences. And if you look now at some of the top senior, the chief execs and the board of the really big banks, I mean, that's a different culture in those arenas and a different style of leadership, which is really refreshing, I think. So we just need to, I think the more that they can talk to their customers and explain what they're doing, then they might rebuild some of the trust that was waned in the past. I think we're gradually getting back there, but it's a long road, actually.
If I could just pick up a couple of brief points there. Firstly, on transparency, just to be clear, I think it's the link with trust that I would question, not the role of transparency itself when we need to look at firms and how they're operating. But on that point of large firms, I think there are interesting challenges about responsibility and accountability when firms become very large. I think it's natural in larger groups. We're compelled by the role of the individual in our society and the accountability of the individual, but a lot of societies, for example, look for complicitous accountability, and we do need to take consideration that simply identifying one person as a wrongdoer isn't perhaps the right answer. There could be complicity in actions, and we're not terribly good at exploring that always.
I'll just add one point, actually, JB, if I may. Is, in addition to size, is how old an organization is. Interestingly enough, if you look at recent organizations like the tech organizations, they've got plenty of culture issues. So you would necessarily think that they're starting from scratch and they would get it right. Well, they haven't. Any other questions from gentleman in the middle?
Yeah, hi there, my name's Ian Sherlock, and just to kind of carry on the way in which the conversation is going, we're in this discussion because we're talking about what is going to be left for the next generation coming through. I think it'd be quite interesting just to understand what are the bases now that organisations are recruiting for, because these are the people that are going to be running them in the future.
So in terms of recruitment strategies, I think it's about trying to get a fully inclusive environment where people can bring their whole selves to work. So ensuring that you're not just recruiting from particular universities, but from diverse backgrounds, I think is incredibly important in moving and continuing to move that culture forward. And that's something that certainly I know that we look at as part of our strategy.
Yeah, similar. I mean, on a small scale now, we've got, if I talk about gender diversity, for example, we've got a pretty good gender diversity, except at exco and board level. It's the same that a lot of banks have. And RBS is leading the way with some very impressive ladies who are now running the business. But actually, we find it quite difficult, if I'm being honest, to find the right candidates for a small business to join us at those levels. That's not through lack of trying. So our plan now is to very much grow from the grassroots and have a good career development plan, very inclusive, and we're seeing some great signs now, some fantastic ladies who are coming through from our more junior management ranks into senior management already, and that sets a great role models for the future, that instead of parachuting people in and trying to find them from somewhere else, we're growing from within. But also, I think it's maybe to your point as well, it's about having the spread of kind of youthful keenness, fintech, millennials, whatever those are, Facebook type folks, whatever that is. But some experience as well. It's getting the balance right, And I look at my mother who's 84, and all the banks have closed in her area. No one's making any effort whatsoever to try and help a bank. And she's not on the interweb, as she calls it. So she's down the post office trying to pay something in. But what's wrong with community banking? What's wrong with sticking somebody in a local serviced office to help these people out? We're not thinking out the box enough. But I think we can actually bring in more experienced people who've had a track record in financial services to help in certain locations where it makes sense.
Thank you. We had a question at the front there, please. Thank you.
Thank you, James Vicario from Triodos. Thanks for a great panel so far. I just want to pick up on the debate on incentives and just thinking about the way in which, if you consider other professions, so if you take teaching or nursing, we consider it sort of, natural that that teachers don't need incentives to be able to take care of our child's education. We consider it natural that nurses don't have bonuses to take care of us when we're sick. And yet it seems an operating assumption that we need to have financial incentives to either drive behaviours or financial performance within banks. What is the point we might need to reach, or what's lacking right now, whereby in the future we'd be able to have bankers who are entrusting making the investment decisions for our future do that without the need for financial incentives and bonuses?
So I think for me, when I talked about appropriate incentives, I don't think it is actually financial. It's about having pride in what you're doing and that work being celebrated at the right level. And you seeing, the behaviours, as I talked about before, in terms of living our value awards, and that being demonstrated with receiving such an award. I don't think it is always about financial. I'm very lucky that my husband's a primary school teacher, so I know very well about, the reasons why he has dedicated his life to that profession and how much he gets out of his role day to day. I would actually argue that I get as much out of the role that I do within the organisation from a pure incentives point of view of doing the right thing and seeing that in a production environment as much as actually receiving financial award. So I should have really underlined appropriate incentives is, I think, important.
One last point, Giles.
I think it's a really challenging question. It's a good one. Those of us that are in that environment, it's a move. I think it's a movement. I think there's a bit of it is competition still. If we're being brutally honest, how do you get the people that you want? If you're paying no bonus, but it's for the good of the job and doing the right thing. It's actually quite hard to recruit on that basis. Sadly, it's still the case. It's a bit of who blinks first, I think, but someone probably has to take the lead on that at some point and move the dial quite significantly. It's not on the immediate agenda. We're all doing great stuff about rewarding people for doing the right thing. That's very, very important. But the financial incentives, I think, are going to be there for a bit longer, if I'm being really honest. Teachers, it's an absolute vocation. My wife, until recently, was a teacher for 30 years. Got paid, maximum head of department, 35 grand. What's going on? My youngest daughter is a doctor, is a registrar in a hospital in Oldham, a gynecology specialist. She's 5 years post-qualified, gets 45 grand. That's people's lives. So it's crazy. I agree with you. It's crazy. I'm not sure the absolute answer to turn it, but I think at some point, I think it's starting to shift a bit in the direction of, less entirely reliant on incentives, more about behaviours. But the whole bonus culture, I think, will take a bit longer to work its way through, if I'm being honest.
Could I just note, though, that all those bodies you're talking about there, interestingly, all have very strong professional bodies which foster a sense of pride in their professions.
Okay, so incentives are here to stay for now, is what I'm hearing. Okay, I think we are. Costanza, I don't know if there's anything else. Otherwise, I think we are. It's time for us to have lunch. So I would like to thank you all. Don't forget to make your pledges to yourselves. You don't need to know, but I encourage you to actually think about that. Thank you very much for your attention.